Hello and welcome. You're watching Your Trades. I'm Kavita Thapliyal and with me is my colleague Mansi Dave. And Mansi, a session end on a good note. We can say that the momentum was pretty upbeat in the market. It tried breaking its resistance, but we should not complain as far as today's trade is concerned because we did end the day on the high note on the high levels. I could say that the day's high levels.
Absolutely, Kavita. And in fact, that too when it's a truncated week.
Exactly.
We were expecting that there will be less of market participation, but we started Monday on a positive note. Yesterday's session, Tuesday, was a dent, yes, again, but then the session today was really good. On a Wednesday session, we did close about 24,600 on Nifty, around 150 points up move, as we clearly did see a good momentum. All the Nifty 50 category stocks results are already out, and if you see majorly, barring 8 companies in the Nifty 50 category, almost all the companies have either posted good set of numbers, decent set of numbers, a mixed bag, or as per expectations. So the results season for the second half at least was good, in fact, is what we can say. We have a few list of cash segment numbers which are yet to come, but the result season was good enough. And talking about the session today, there were a few stock specific moves which we did see, and quickly let's take a look at what made headlines. It was the indices which made headlines because it was one session surprisingly where the indices were performing, the sectors were performing, and there was a lot of stock specific approaches during the session also. So literally every piece firing the cylinder, and it was really good during the session altogether. Talking about Paytm, the stock was really doing good in the session today because it got an RBI approval as a payment regulator, and it was something which was much awaited, and after which after getting the approval, the Paytm stock did do really good in the session. During the entire day, we did close around 11:55, and there were talks that when will Paytm see a level above 1,000. Now it's witnessing a level above 1,000. If we have a look at the brokerage stakes, it's all positive, and the brokerage also anticipated to go around about 1,200 and even more. Talking about the new age technology space, Nykaa, Hunasa did deck up in the trade. Of course, on the back of good positive numbers. Apollo Hospital, yet again, another stock which did see real good on the back of good set of numbers and brokerage positive reports. Bullish reports also did well for Bharat Dynamics, and yes, there were a few other news flows also which were ranging in the trade apart from the market specific news flows. But all in all, a good day. And yes, now is the time when we should understand what should be the strategy for the session next, Kavita.
All right, so the Nifty reclaims 24,600. That's a good note at which we saw the market ending. But then what's the momentum ahead? Let's get that checked in. We have an expert joining us, Samar Singh, Senior Vice President Research from Angel One. Amar, hi, afternoon, and welcome to the show. So we are ending on a very resilient and a strong note, but then what's the way ahead? Tomorrow will be the last working day of this particular week, but then again, we are directionless now since even the earnings season is over. Yes, the festive time has already begun, but then still we are waiting for a very important cue that we will get from 15th August onwards.
Yeah, I would say that markets have corrected significantly. I would say if you look at the benchmark indices from almost 25,600 levels towards 24,300. So there has been a sharp correction there, and now we are seeing some pullback. So the big question is this pullback going to sustain or not? So my answer here is that for Nifty to show a trend change, because if you look at the trend from a short-term perspective, that continues to be negative. I've been seeing that for quite some time. So, but since Nifty's moved to oversold territory, Nifty's moved around crucial support zones, and some of the heavyweights are also witnessing some pullback. That's the reason we are seeing this up move. So ideally, Nifty needs to sustain and close above the 24,800 mark consistently and trade above that level. Then we can say that that short-term trend has changed. Otherwise, the trend remains bearish. But since it's around support levels, that's the reason we are seeing some pullback. Uh, if I look at Bank Nifty, because Bank Nifty is comparatively weaker as compared to Nifty as of today. So we could see some further. So Bank Nifty would give the first clue. So for Bank Nifty, crucial support zone is somewhere around the 54,900 levels. Currently, It's around 55,200, so roughly around 200-300 points lower. That's a crucial zone of support. If that is taken up, then we could witness some 700-800 points correction in Bank Nifty. That's quite likely. On the other hand, if Bank Nifty sustains some of the 56,000 mark, then we could say that there's a possibility of a trend change. But if I look at some of the technical indicators from a shorter term perspective in Bank Nifty, they are extremely negative. So effectively, it means is that any rally in Bank Nifty is not likely to sustain from a short term perspective, and we could witness some consolidation before a significant trend change happens.
All right, so that's a view coming on in particular indices as well as sector specific. But then Amardev, what are the stocks on your radar and what should one eye for the coming session?
Yeah, so I would say that if one is looking at some stocks, so one is Sun TV is one stock one can keep a close watch on because what we are seeing in Sun TV is that the stock has corrected from almost 900 levels. Currently, it's sub 600 odd levels, but it seems to have formed a very strong bottom. So the 545, 550 zone has been a very strong support from where it has bounced back. Today also has been a positive day. And we've seen some significant support coming in. So this is one stock one can look at buying at the current levels for an upside target of 630 and a stop loss of 555. And the second stock to look at is from the NBFC space, that's Bajaj Finance. So what we are seeing here is that Bajaj Finance has corrected from almost 980, currently it's around 860. So the shorter term trend is negative, but it's around very crucial support zone. So a pullback trade can be looked at Bajaj Finance at the current levels with a stop loss below 840 and a target of 890 on the upside.
So, Sun TV and Bajaj Finance are your picks, and yeah, with a strict stop loss, you can keep those targets on radar. Thank you so much, Amar, for taking time out and strategizing this for our viewers today.
Thank you.
But then we move on. Prateek Gupta, CEO and co-head Kotak Institutional Equities, shares his outlook on the new age tech consumer stocks like Nykaa and Honasa. He sees muted near-term returns, but is bullish from a 3 to 5 years view.
We would rather play companies where sustainably on a longer term basis, apart from the cyclical second half seasonal uptick, you will see continued sustainable growth in the years ahead. And that usually is these consumer tech companies like some of the ones you mentioned, where they're gaining market share, they're pulling further away from some of the weaker competitors in this slow economic environment. So again, what we are saying is look for category leaders, even within the consumer sector. Look at these consumer tech companies, which are category leaders. Some of the names you mentioned, Nykaa, Honasa, etc. They are pulling further away from some of the weaker competitors. But again, the next 1 or 2 quarters are still going to be somewhat tough. Valuations are elevated. So don't expect any dramatic returns from their stocks in the near term. But on a 3 to 5 year basis, if you're willing to wait that long, these are the stocks we would like.
Well, new age consumer players like Honasa and Nykaa were soaring in trade today post their Q1 earnings. My colleague Snehi is joining to help us understand what worked for them and what the brokerages are penciling in.
Well, absolutely. Two stocks that are up in a way, Nykaa as well as Honasa Consumers on the back of its Q1 earnings. Both of them very good set of numbers coming in. Let's take it one by one. Understand first what worked for both of them individually. Nykaa, revenue, EBITDA and margin in line with our estimate. The overall GMV came in at 4,182 crores, which is up 26% year on year, in line with our estimates. What really pushed the stock to do well this time around in Q1 was the BPC revenue. That was up 24%. We were expecting an 18% growth, so beat on that front. Fashion GMV also up 24.5%. We were expecting a 20% growth, so big beat on that front as well. While we're talking about the fashion segment, the fashion net losses have reduced on a year-on-year basis to 27 crores from 30.3 crores last year. So these were all the factors, the top factors among other positives that worked for Nykaa this time around. Let's shift tail and talk about Honasa consumer revenue in line. PAT EBITDA margin beat versus our estimates. EBITDA margin expansion has been healthy. Focus categories like face wash, shampoo, serums, they've seen double-digit year-on-year growth. There's been 100% year-on-year growth in face cleansers, and this is the third category to reach an ARR of 100 crore plus. The revamp in the general trade strategy, remember that they did last year, has reaped into results. Modern trade and offline retail distribution are both up 20%. Direct distribution strategy is up 50% year on year, and that has driven a 50% increase in retail outlets built in Q1. Now let's come to the guidance front. For Nykaa, they are on track for their fashion EBITDA margin break even in FY26 this financial year itself. They also say that beauty vertical has room for more profitability, and they see opportunity in health and wellness supplements, and hence the acquisition of Nudge Wellness. For Honasa, they expect double-digit value growth for the remainder of FY26, EBITDA to be maintained between 7 and 8%, and they expect larger brands to reach the mid-teen EBITDA margin by 4 to 5 years. Lastly, what the brokerages are making on both of these stocks: for Nykaa, Jefferies maintains a buy, Citi maintains a sell, Axis Capital and Nuvama have all maintained buy, but barring Nuvama, all of these other brokerages have hiked the target prices as well. As is the case for CLSA, for Honasa, wherein CLSA in fact has upgraded the stock to an accumulate from hold, hike the target price. Jefferies continues to be positive, Goldman Sachs has maintained neutral, JP Morgan has maintained underweight, but even both of these brokerages have hiked the target prices nominally. So that's the take on the Q1 of both Nykaa as well as Honasa, and what has gone right for both of them this time around.
All right, Snehi, thank you so much for all those updates. So that was the story of the UH tech counters. But then let's move on. Hindalco came out with its Q1 earnings, which was above street estimates on a standalone basis. We have a whole host of brokerage houses coming out with notes on the stock. Ashisha is here to give us the highlights of the con call and the brokerage notes.
Well, yes, Hindalco's standalone business reported very strong set of numbers. It was better than what the street was working with, and management also came out with its commentary where they expect that the resilience in the Indian economy is likely to aid standalone performance for Hindalco going forward as well. We have Motilal Oswal. They've reiterated their buy stance on the stock with a target price of 790. They say Novelis outlook for earnings is expected to remain soft in the second quarter as well, but earnings could rebound in the second half of this financial year. They've also said that strong domestic earnings will perhaps manage the impact of soft earnings we could see that could come in from Novelis for the rest of this calendar year. We have JP Morgan. They've maintained their overweight stance. Target price has been lowered marginally to 715 from 720 earlier. Citi maintains a buy. Target price hiked to 820 from 800 earlier. Macquarie, meanwhile, has also maintained its outperform stance on the stock, and target price has been maintained at 809 per share. Now remember, we also spoke to the management of the company, and they insisted and they reiterated the fact that second quarter will be as stable as the first quarter, especially for Novelis, but the outlook going forward is likely to be very positive for the second half of the year. Let's in fact go across and listen in to what the management had to say.
We think that the measures that we have put in place, where scrap spreads are improving, a cost optimization program is gathering steam, as well as end market demands are pretty strong. So the guidance that we're giving is that Q2 will be more or less equal to Q1, but the second half of this year you will see meaningful improvement in the Novelis margins and performance. We remain committed towards that $600 per ton EBITDA, and that will largely start to come in once our Bay Minette project gets commissioned, which is starting in Q3, Q4 of next year. But in the short term, you're going to see Q1 and Q2 at similar levels, but the second half of this year, you will start to see meaningful improvement in the margins in Novelis.
So that's a stable quarter expected from the management is what they were saying. But then two other stocks were in focus during the session, of course, on the back of the quarterly numbers, and then came the management commentary as well. The stocks are Apollo Hospital and Titagarh Rail. Apollo Hospital did remain optimistic about future growth prospect, and when we had a word with the management, the MD Sunita Reddy did say that they are aiming for 25% hospital EBITDA margin going forward. And while we talk about Titagarh Rail will have a good few quarters ahead is what the management says. Umesh Chaudhary of Titagarh Rail System gave this a comment, and he also did talk about the shipbuilding business. Let's listen to both of it.
Going forward, this year we'll open out 2 facilities. We'll have Pune ready. We've also acquired a hospital in Bangalore, 150 beds, which will go live next quarter. So We're looking at adding about 400 beds this year. Um, Further on in the next year, we'll add another 800 beds. So, in terms of profitability and margins, currently we're at an EBITDA margin of 24.3. We think that we'll move towards 25%, and the losses coming in the current year will be very limited because we're opening 2 facilities. We will be on target for 100 crores of GMV for insurance, where there's a 20% conversion into revenue.
Our foundry expansion is also coming in track within this quarter and the next quarter. So whatever castings that we were buying from outside in order to achieve the target run rate of say 900 to 1,000 wagons, that also would be completely will become self-sufficient for the foundry capacity as well. We have seen good traction of inquiries coming from private sector customers of wagons. The shipbuilding business is going to continue in the new company and is going to grow in the new company. And the government has very clearly articulated that shipbuilding is a thrust sector for the government, both for infrastructure purposes, but also for nation building purposes. And therefore, having built more than 35 vessels in the last few years for the Navy, for the National Institute of Ocean Technology, for the Coast Guard, and all of that, we thought that it will be a national waste and a shareholders waste for the company.
Moving ahead, Paytm Payment Services said it has received in principle nod from the Reserve Bank of India to operate as an online payment aggregator. The approval is subject to compliance with the RBI's norms, but Varun Dubey joins in to explain what this means for the company. Varun, over to you.
It's a positive development for Paytm, wherein the company has received RBI approval, in principle approval, for the payment online payment aggregator license, and this has been given to Paytm Payment Services Limited. Now, if you remember, in November 2022, the company has applied for this license, and the overall application of the company was actually rejected because of the FDI guidelines. The company was told to comply with the FDI guidelines, and after that, you have seen AntFin actually selling around 10% stake in the company at that time. And in August 2024, it was the Ministry of Finance who actually gave FDI approval to the company for downstream investment in Paytm Payment Services Limited, and that time it was when the company actually went ahead and has applied to RBI for this license, and finally the company has got the online payment aggregator license. Although the company will have to undertake system audit, including one for cybersecurity, and the company will have to submit the audit report to RBI within 6 months. But this move is actually considered very good for the company, because there are several brokerage houses which are saying that the license will actually enable Paytm to strengthen its merchant acquiring business, because now the company will be able to acquire new merchants online, because earlier it was like the company was only allowed to continue with the ongoing merchants and not allowed to undertake new merchants. But now the company will be allowed to undertake new merchants, will be able to acquire new merchants, and also this will improve the overall transaction volume for this company. So it's a positive development for Paytm, because it was long pending that the company was not able to receive the online payment aggregator license. But yes, since then a lot of competitors have actually entered this space. So let's see in the long term how actually Paytm takes advantage of this license. But yes, for today the news is a big positive for Paytm.
Right, a big positive, and finally getting the approval, which is much awaited for Paytm. Moving ahead, we have Raminder with us with all the stocks and news that were doing the rounds on the exchanges during the session. Raminder, over to you.
Well, as on the back of quarterly earning, Avanti Feed is in focus, where company reported a revenue at 1,606 crore with an uptick of approx 7% year-on-year basis. And if we talk about net profit, then company's net profit also saw a good uptick of 39% year-on-year basis at 178 crore, and margins also saw an expansion of more than 250 basis point year-on-year basis. So back of the strong Q1 number, Avanti Feed is also in focus. Apart from this, NMDC still is also in focus on the back of their strong Q1 number, where company's revenue saw an uptick of more than 66% year-on-year basis at rupees 3,365 crore, and companies reported net profit for the first time at rupees 25 crore, and margins also company reported margin at 12.1%. So back of the strong Q1 earning, NMDC still is also in focus. Apart from this, Oil India were also in the focus in today's trading session on the back of their weak Q1 earning, where company's revenue saw a decline of more than 9% on a quarter-on-quarter basis. And if we talk about net profit, then company's net profit also saw an downtick of approx 49% on a sequential basis from 1,591 crore to 1,813 crore. And if we talk about EBITDA margin for Oil India, then EBITDA margin saw a downtick of approx 400 basis point on a quarter-on-quarter basis. Apart from this, fact is also in the focus in today's trading session on the back of the quarterly earning, where company saw revenue saw an uptick of approx 74% year-on-year basis from 600 to 1,043 crore, and net profit. Company reported net profit at 4 crore as compared to a loss of 49 crore year-on-year basis. And lastly, Alkem Lab is in focus on the back of their brokerage note, where ICICI Security has come out with a note and they have upgraded the stock to buy from add and hike target price rupees 6,065. And Jefferies has also come out with a note and they have upgraded the stock to buy from underperform rating and hike target price rupees 6,000 as compared to earlier target price rupees 4,460. So back of this, Alkem Lab were also in focus.
All of those details, Ravinder. Moving ahead, let's go across to Snehi and understand what are the cues to watch out for tomorrow. Snehi, what are the cues and triggers we need to keep an eye for tomorrow?
Well, yes, lots of cues to watch out for, lots of important events and macro data to be tracking. Since it's Thursday, it's going to be the expiry day that is going to be very closely watched out for, and how the markets trade, given that on Friday all eyes are going to be on that Trump and Putin meeting. So the market may show some impact of that, given it's also the expiry. Other than that, if you take a look at some macros that we'll be tracking, the WPI data will be in focus after the CPI. The wholesale price index data will be released, so watch out for that. In terms of global macros, from the US, you have PPI and initial jobless claims, from UK industrial production, but along with that, the UK GDP figure will also be out, so keep a very close eye on the British economy. Other than that, from Eurozone 2, the GDP figure will be out along with their industrial production. But shifting focus back home, Q1 earnings, then none left from the Nifty 50 group of stocks. But if you take a look at some broader market companies, then you have Amara Raja, Ashok Leyland, IOC, Borosil, National Fertilizer, Vodafone Idea. All of these companies will be reporting their earnings, so keep a close eye on them. In terms of corporate action and board meetings, the likes of Astral, Bandhan Bank, Gland Pharma, HPCL, Manappuram Finance, Mahanagar Gas, and a whole host of other stocks like NHPC, NCC, REC will be trading ex-dividend. On the AGM's front, keep a close eye on Aegis Logistics, Manappuram Finance, Amara Raja, Deepak Nitrite, AB Capital, as well as Ashok Leyland. The lock-in period will open for Jana Small Finance Bank, wherein 20% equity comes out of lock-in, so watch out for the stock reaction. And in terms of other events, all eyes are going to be on Richmond Fed President Thomas Barkin. He's going to be speaking at an event, so that speech may have some cues about where the US economy is headed, what they expect the Fed to do next. So watch out for that, and watch out for all of these other cues, all of them very important to track.
Thank you for all of those cues, Snehi. Well, that's all from your trades for now, but there's a lot of news flows up and running on ET Now, so you stay tuned with us. Thank you.